The coronavirus is here, but in this episode, I'm speaking to lenders to learn how you can become and stay being from the neighborhood. Three most important things in life are food, water, and shelter. And that one component of shelter has so many people involved. And it's very important for us to know that the financing we're gonna need to obtain that shelter is available. Guys, thank you so much for joining me. I'm appreciating that you guys are here and willing to voice out from your standpoint as a professional and provide information to the public that is so crucially needed. Let's talk about how things are going. How are things in your life, first of all?
In my life, things are fine, but for those of you who know me, I'm always an optimist. I'm always doing well. When someone says, hey, how you doing? I'm doing great, or I'm doing fantastic, but don't worry, I'm getting better. That's just where I live. And I've approached the mortgage industry that way, and we're making things work.
You know, doing well, getting used and acclimated to working remotely and keeping the ship going. Swung right into, getting things set up with everyone working remotely. And kind of much like what Quentin was saying, we roll with the punches, right?
Just in this call right here, we have about 49 years of experience. So 17, 15 over here. So we've been dealing with brick, wood, and cement, real estate for that much time. So that's a lot of experience in the room and a lot of knowledge to be shared. So now tell me what's happening on the mortgage side. Are you guys still in business?
We still have people getting offers accepted and people going into contract. Things are going to move forward and things will get figured out. And that's what's happening.
Business has been still amazing. Obviously, we're capturing a lot of the refinance market. But even from the purchase market, I'm getting phone calls up until about 20 minutes ago where people are like, hey, listen, I need to get an offer in because there are other offers and other bids on this property, and I want to get my offer accepted. Of course, people are taking advantage of the rates being just so historically low. So the market is still moving. People are still doing what they have to do, and they're adapting. Yes, as these issues are coming up, they're being dealt with, and we're kind of getting over that hurdle, and we're moving forward. And title companies are finding ways to put things in place, and lenders are finding ways to put things in place. So I still feel that it's still business as usual. It might be in a different way, but things are still happening and things are still closing.
We've got the most creative people trying to figure things out because people still want to get into a home and people still need to get out of a home, right?
I do know that we're going to figure it out because we have before. When this happened, when 9/11 happened, we figured it out. But understand that being the sixth largest purchase lender, we were formed 11 or 12 years ago, actually in 2008, during a crisis. We're built for crisis. During the housing crisis is when this company started.
Wow.
So we're actually built for this. So much so that when they said go home, every processor, underwriter, loan officer, we all work from laptops. So some of the banks are having issues where the people can't work from home. The technology is allowing us to move forward. We're built for crisis. We're processing loans 24/7. We've got processors working and underwriters working weekends and getting stuff done. And just like in the 2008 crash, just like Hurricane Sandy, just like 9/11, we will figure it out. We're going to get it done. So some of us are freaked out. We're not one of them. It's going to get done. We're going to keep going.
Let's first go into the people who are in a transaction right now and they're stressed out, right? They're stressed out because they're saying, well, I can't exactly go back to that house. Maybe they don't let them back in, or maybe they just themselves don't feel comfortable, or they are sick and they can't go back to the house for that second view.
I met with a lady on Zoom on Friday. It was an appointment that was going to be a face-to-face, but we had the broker, the agent, the home buyer, myself, all four of us were on Zoom. We did an application, a consultation, got her pre-approval. Her offer actually got accepted over the weekend. The owner has coronavirus, so she couldn't go into the house, but she did a virtual tour and she saw everything she wanted to see. She knows the neighborhood and she's making an offer. They're going to have to email or scan, and we can do video chats if they want to see me face to face. That's what the world is going to be for the next few weeks.
So I agree 100% with Quentin. What I am just so thrilled about is the utilization of technology over the years, and especially now how it's hit home with everything that's been happening. So what we've been able to do, and especially now, is as Quentin said, if a client wants to have a meeting, we can do a Zoom, which I've done with many clients over the last week. We fortunately, which I've helped to play a major role in implementing, in the last 6 months, we rolled out our mobile app where we send a link over to our clients. They could download the app, complete their application. There's a scanner that's right there. They can upload their documents. So we get everything right there. They can be in communication once the loan application starts.
So they may start their transaction that way, and if it goes for a long time, they may even finish their transaction that way. I don't know. Or it could be over in a few weeks and they'll finish their transaction like a normal, face-to-face sort of situation.
How do you foresee the appraisal happening in that transaction?
That's a great question. Now, I know when the appraisers go to a house, they are going to ask, is everyone healthy?
We need to make sure appraisers can still go out there. And of course, with health concerns, they did come out with, being able to, especially on refinances, many clients will qualify if they're a Fannie Freddie servicer, loan. Then they can get appraisal waivers, or the appraisals can do drive-bys and provide just external photos and use values based on that, and not have to provide interior photos.
In regards to reno, though, we have if it's 35,000 or more, it's not streamlined. Am I right?
On the FHA 203K, correct.
So let's say not 35,000, it's more than that, and now someone has to get a full walkthrough, HUD consultant and all. How are these things being handled? And is the bank being a little more conservative on what they're allowing to get repaired in the home, or even what they're willing to lend in the home? Is there any of that changed?
I haven't seen any change. No, more or less conservative. The home is the home. It's still got to be safe. You still got to have, functioning utilities. The HUD inspectors, that's their concern. They have to wear a mask, wear gloves when they go in, and they've got to be careful. And just like an appraiser or any other inspection, they probably should ask before they go in, has anybody been to, China or Italy in the last 2 weeks? Is everybody in the house healthy before they go in?
Buyers that don't fit into what our traditional loan program. This may be a no income, a stated, things that they don't normally show just the W-2 for and run through the conventional path. Are those loans still coming through and being processed, and are they able to close?
Non-QM lenders that are out there, they just suspended any new lending. And so a lot of these non-QM companies, banks, so people that were doing, let's say, bank statement programs or limited income programs and all that stuff that were in the process that already had a commitment are not allowed to close. They pulled the commitment, they pulled the closing.
We all know that the current circumstances can lead to substantial delays. So what are lenders doing with those rate locks? Are they being flexible?
What we are doing to try to secure our buyers in terms of making sure that they can capture the interest rate that's here, on majority, depending on when the on or about closing date is, we're locking those clients in most cases for an additional, 30 to 60 days beyond that. So not only are we locking clients in for, let's say, on average 60 days, but, in some cases we're doing, 120 days just to be safe for them and make sure that, hey, regardless of what happens, your rate is locked in, you're good, you've captured the bottom of the market in terms of interest rates.
COVID-19 can bring on a lot of implications, logistical things. What is your opinion on a buyer's position at this time? Being in the market, is it an advantageous moment for them to shop for a home?
This might be a really good opportunity for some people who have the foresight and the optimism to know that things are going to get better.
Yeah, there's still great opportunities that are out there. There are still some really great properties that you can pick up, and people are still working, employed, working from home. Many people in the IT industry and many other industries that are out there that are allowed. I mean, again, even teachers, they're working from home, but they're still being paid. There's still some great opportunities out there to buy. And don't neglect it, especially when you're talking about the type of interest rates that we have right now, right?
Folks are still able to take advantage of great rates, possibly low competition, and likely be able to see themselves in a better position than if they probably were home shopping 4 months ago, right? So again, with great rates, I'm sure you've had homeowners come to you not wanting to sell and saying, hey, I want to fill out a refinance application. I don't want to put my house on the market.
We've seen a huge uptick in a refinance market because of that. Because people are now, for a couple of different things, right? People are saying, hey, listen, I don't know how much longer this is going to last. I don't know how much longer I'm going to have a job. I want to be able to, if I can save $300, $500, $800 a month, if I can utilize some of my equity and pay off my bills and maybe take some cash outs for a reserve. People are being proactive.
You just mentioned people buying and selling and changing. I do have what I call my first Corona refinance. It's a person who has a multifamily in Brooklyn that they were about to sell. And rather than put it on the market, they said, I think we're going to have some struggles. And based on this person's career, they said, so I'm not going to put it on the market. I want to do a cash out refinance and take out a little over $100,000 so that if things are rough, I've got money, to hang in there with.
Right.
So that was one change that, this person a month ago, they were going to do something very different. So some people are reacting differently and doing different things.
So these homeowners who are refinancing, do you think that they are doing it to better position themselves?
And that's one of the things that I'm happy to see compared to, let's say, back in 2008, where a lot of people just kind of didn't believe that things were going to get so serious. And they waited too late until, let's say, they did hit a hurdle and then said, hey, now that I lost my job, how can I refinance, or what options are there for me? So people are now taking what's happened in the past and being very proactive in this day.
So we already discussed a bit about their position, the rates and so forth, but there's so much that lies ahead. And with the moratorium just getting started, what are some of the things that you suggest for homeowners and prospective borrowers to start doing now?
The bottom line is it's going to be different lender to lender, case to case, situation to situation. There's no generic answer, but I would say this: don't assume anything. I saw people saying, "Oh, hey, I saw what Cuomo said, so I'm not paying my mortgage." Don't do that.
Well, some people are not paying their rent.
Yes, exactly.
Some people said they're not paying their rent, and which will hurt them in a mortgage application because now they have an issue with that.
Find out what the rules are. Find out if you qualify, and find out if that's really something you want to do. Find out, speak to your lender in your specific case, and then make a judgment on what to do.
The good thing about it is, and the advice I give to people is, if you can still pay your debts and your bills right now, do it. Pay it. Because nothing is for free. And if you deferred for 90 days or whatever the case is, you're still responsible for it. So why put that burden on yourself down the line? Why not just address it? And then when it does get difficult, then you can look at those options.
Yeah. We've probably all heard it, and I learned it as a kid, and I'm an adult, and I've subscribed to this. Ain't no free lunch.
So how can we have borrowers understand that this is unlike 2008, but you would need a hardship? And if they do, because they were affected by COVID-19, what are the best ways that they can start gathering their information to then speak with their lender?
People that were realistically in hardships, right? Like, remember when we had the whole modification boom, right?
Yes.
And we had people that had realistic hardships. And then we had people that were like, well, I heard you could get a 2% on a mortgage, so I'm going to create a hardship, made up hardship, just so I could try to get into that. And when it backfired, found themselves, in a real sticky situation. Number one, be very realistic with the situation you're in. If you really legitimately have a hardship, document it. Document your bills, what your monthly expenses are, what your income used to be. Obviously, if you're not getting paid anything now, you can show that. Or if you're getting paid half your salary. But again, documenting everything is so important. I've told a lot of people, get job letters or get some type of proof that you've been, furloughed or laid off or you lost your job. These are ways that, again, you have substantial evidence to back up what's going on.
And I have a question on that. So now we're talking about someone who doesn't have a Fannie or Freddie loan. We're talking about a moratorium on a federal level where the 60 days for Fannie, Freddie, and the governor putting in 90 days for New York. Could these people not qualify because it's not a Fannie or Freddie? So maybe they're not part of that moratorium.
The way I see it is that I think these lenders are going to fall into play with everyone else. Number one, they don't want to be on the government's radar as not being helpful to people, homeowners and clients in a situation as this. And second of all, I think, as I said, they're understanding that, hey, listen, I'm not trying to get people out of their homes. I want them to stay in and work with them to get back to a place of where they can pay on a normal basis.
There can be a lot of confusion regarding these loan modifications, this moratorium and so forth. I mean, in the end, if this person has it and it's available to them, what do you think? Should they take it? What's a tip that you could share?
The main thing is, don't change anything that you don't have to change. If you are offered a forbearance, you may not want to take it. And the second part of that tip is to know the rules. how, like, sometimes I do remember in Hurricane Sandy, there were people who, with one specific bank, they said, look, you're in a hurricane disaster area. You don't have to pay your mortgage this month. And they said, great. Okay, I won't. And then they had a mortgage late when they went to refinance 11 months later. And they go, wait, but the bank said I didn't have to pay. He goes, yeah, you didn't have to, and we reported you late. Then they couldn't refinance because they had a recent mortgage late. And one of the people I remember speaking is, but I had the money. I said, well, if you had the money, then you probably should have paid.
Right.
Again, there's no free lunch. So understand if somebody's offering you something or offering you something for free, read the fine print, find out the rules. And if you're buying a home, you probably don't want to change anything. Keep paying what you can pay, move forward, and realize if you're a buyer right now, the fear that some people have may reduce the competition.
But we all want to be ready, right? So I think maybe being ready was, number one, if you're in a situation or think you're going to run into a situation, document your stuff, right? So you can develop the case for this forbearance and any sort of eligibility of assistance, right? And then if you're not, then don't take the option and continue to make your payments, whether it be your rent, pay your rent, or pay your mortgage, so that you can be in the best position moving forward if you had to refinance or if you were ready to start buying a home. Thank you so much for doing this.
No, I enjoyed this, man. I would love for us to do it again.
Yeah, thank you. Thanks both of you for your time, and we'll be in touch, and hopefully this thing will pass and we could even do something live. All right?
Absolutely.
All right, guys. All the best.
All right.
Don't forget to subscribe. As always, I'll be seeing you back in the neighborhood.